South Africa's mining and factory exports fell in the third quarter and resulted in the country's current account deficit widening more than expected. The Reserve Bank says the deficit widened to 4.1% of gross domestic product from a revised deficit of 2.9%. Fears of a trade protectionist
current account deficit reflects that the country has spent more on importing goods and services than it has earned in exports. Despite the Treasury's efforts to narrow the gap, the country's deficit position remained stubbornly wide through most of this year. The Reserve Bank says the deficit in the current and trade accounts were due to weaker global demand for the country's goods and a weaker rand.
How are we going to get that back again? Only by increasing exports and decreasing expenditure. Well, I'm afraid that from the government's point of view, it looks like they are going to continue spending more than they're earning. So what does that do? That means they're going to have to borrow more at what will probably be a higher interest rate because we're seen as a worsening risk.
The bank says fixed investments by companies decreased for a fourth consecutive quarter, declining 1% after a 6.8% fall in the previous quarter. Private businesses in particular are cutting down on spending.
You take some of the big civil engineering construction companies, take Murray and Roberts for instance, what they have done is closed their building section. They've closed it. They say there's not enough business to justify keeping it open and keeping the running costs going. So that I think is rather worrying regarding a future outlook there.
The economy is forecast to grow by 1.1% next year from an expected 0.4% growth this year, nowhere close to the 5% growth rate needed to create meaningful employment. Devin Murrigan, SABC News, Johannesburg.